Recipe for a rally. Profits are strong, global growth is steady, and inflation is low. For investors, that means there are few alternatives to stocks. And that's exactly where people are putting their money today, sending all three major indexes to all-time highs. The Dow Jones Industrial Average advanced 160 points to 23,590. The Nasdaq gained 71, and the S&P 500 added 16, closing just below 2,600. But how much more is left in this stock market tank? Mike Santoli takes a look.
The economy is humming. The Dow just touched a fresh record high, and hopes are building for progress on a tax cut after Thanksgiving. A lot has been going right for investors, yet it's worth asking if the markets are close to using up all the good news. Stock indexes did manage to push slightly into all-time high territory on Tuesday, but the move came after the broad market has been stalled for nearly a month, and it's taken quite a lot of positive news to support the market. A measure of how strong economic reports have been relative to forecasts has surged in recent months toward a 5-year high. Corporate profits were quite good in the third quarter, yet on average, stocks failed to rise notably after companies reported good results. And the government bond market has confounded economic optimists by keeping long-term Treasury yields steady, often a sign of muted expectations for future growth. None of this argues that the stock market is at any crucial peak or is sending scary signals about the economy. All year, stocks have advanced in an orderly way, with periods of sideways movement along the way. We could just be in for another of those idling phases right now. Yet as strategists fashion their 2018 market predictions, they're grappling with the reality that stocks are richly valued, the indexes have grown more dependent on a cluster of huge tech companies, and the Federal Reserve seems determined to push interest rates higher at a quicker pace. As for possible corporate tax cuts, they're largely viewed as a positive for stocks should they arrive by early 2018. In fact, Goldman Sachs assumes such a cut will pass as the firm projects a further 9% gain for U.S. stocks in 2018. The question now is whether corporate profit forecasts and stock values have started to price in the benefits of tax cuts already. If so, those cuts could prove one more bit of good news the market is using up. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.